Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Chelsea Oliver. Welcome to today's morning call. We have a lot of green arrows around the world to start the week today. Europe has some upside follow through, while Asia not looking too shabby, right?
I'd say all of overseas isn't looking too shabby. I'd say a lot of these sectors that started to turn off the lows are starting to become a bit more of a tailwind versus a headwind. We do have a lot to look forward to this week, but like you're starting to see some rallies in Japan, in China, and in Europe, and they're not just moves off the lows, they're actually starting to trend up a little bit towards what could be bigger resistance, but there seems to be some room. So let's take a quick look at those. We look here at the DXJ, which right here is a proxy for Japan. Okay, you had your low right here, when most indices hit that, hit their low, but it only just started to turn up. It took back the 8 and 21-day moving average right here, and it looks like it's going to poke above this little resistance. So it seems as if your next spot in the DXJ comes a little bit north of 46. And look here, the 200-day is all the way up at 50. If you look real quickly at the EW, let's go to actually FXI first because we'll stay in Asia. Go to the FXI. The FXI has been trapped in a major downtrend, major ever since hitting north of 52. So it's still only down here at 32. So with that being said, it started acting better again once it took out the 8 and 21-day. If you want to take a little closer look here of where potentially the FXI can go before it starts hitting some resistance, the real resistance comes in, or the first level resistance comes in right around here. Now that you took back the 8 and 21-day that's starting to curl up, this comes all the way up to like 34-ish. And then if it happens to go to the 200-day, look how much higher that is. So there's still lots of room overseas if the markets want to continue to go. And then last week you had the craziness with the ECB on Thursday. First it looked as if it was going to fail. This was a very wide range bar right here on that Thursday, and then they trapped everyone and gapped it up. So now it seems like Europe, which has their news out of the way, has an unfilled gap all the way up here towards this 2570, and then this too might hit the 200 days. So you want to make sure you're not just fighting things, especially when they stay above the 8-day moving average, which is the new trend. So there is a bit of a void here. So I could see some overseas markets continuing to have a bit of a tailwind versus a headwind.
S&P futures are off small as we have two big events coming up this week. We have the Bank of Japan on the 15th and then our Fed on the 16th. How will that affect the market, do you think?
I think kind of like last week, we were quiet ahead of the ECB, or we came to like a crazy inflection point, and then right around it is when the fireworks start. So it's good to know that you have the BoJ on the 15th, and then the 2-day Fed meeting, Tuesday into Wednesday. So we could be in a little bit of a quiet market to digest the prior moves until then. So you don't want to overtrade. So if you look here at the chart of the S&P, first of all, lots of things have taken place, in the course of the past month. All right, first you had your double bottom right here, which was that test of the 1812. Then you had your quick 3-day move back up to resistance. And right here, everyone said the market can't get above this. Well, you know what? It pulled back and then it proved it could hold higher. Then you had another move all the way up to, pretty much, this next resistance spot, which was 2009. And then here again, let's take a closer look. Everyone said, it can't continue. It pulled back, and then what did it do? It held the 8-day moving average, proving right here that it can hold higher, just like it proved here, and almost just like it proved right here. So what has it been doing? It's been floating above the 8-day moving average, and now finally it took out the resistance that week and took back the 200-day. So now, in order for this to build a new platform, it probably needs to do some work above this. So if you go and put a line here, I would say first level of support is this 2009, which was the prior pivot. So as long as we stay above 2009, I don't care all the bears out there saying this can't end well. Well, you know what? It's got to stay intact until at least we take out that, or the 8-day, which is down here at 1994. So I would write down 2009 as active support number 1, and then 1994. And if the market wants to continue going, okay, after a little digestion, the only pivot reference you have here is 2022, and then you're almost coming back into this bigger resistance, which comes in a little bit closer to 240. Now, before I get back to Chelsea, I want to just go with the spiders real quick. Spiders, a lot of us trade it too. Same pattern here. Here's your double bottom. And then this is when it took out the pivot of the week, which was 2009. So as long as we stay above this 201, spot. You can't get too bearish, and if we could digest for a day or so, above that, your pivot here is 202.81, and then this gap gets filled, closer to 204, and then all of a sudden, boom, here is upper resistance, which isn't too far away. So let's make sure we take it step by step.
Most sectors have enjoyed a nice 4-week rally. What levels in technology and small caps do you think need to hold in order to continue this momentum?
I think that's a good way to look at it, because after a big move, you want to kind of compartmentalize it. And technology is good to know where it needs to stay intact. So if you look here at the Qs, okay, which is the ETF that some people trade for technology, you'll see that it just, after getting a little choppy in here, started to clear another spot. So granted, the 200 days right here, all the moving averages are diverging, so it'll be interesting to see if it could power through that, and then get up to fill this gap or not. So with that being said, I would think the level that needs to hold here is the 8-day again. So you could either start with 105.46, which is Friday's low, or the 8-day, which is a little bit below it, closer to 105. But if it could hold that, taking out this 106.49, and then boom, here's your resistance right in front of it. And I think it's important to know what the small caps are doing, because it helped broaden this move out, and you had this feisty move when it took out this inside area. But if you look here, it did not make a new high on the week like the S&P did. So if all of a sudden the futures or the spiders want to digest a little bit, and other sectors want to continue higher and just trade on their own merits, the IWMs could get through this 108.33, and then you have the recent highs here, and then at some point perhaps it wants to test its 200 days. So I'm going to look to see if the Russell that kind of just regrouped and digested an enormous move could play, or could have a little relative strength before the market decides to do what it wants to heading into the Fed on Wednesday.
Banks played catch up. Usually they're active pre-Fed. Will you put attention there?
I think kind of like the Russell, sometimes people can say, okay, is the Fed going to be more hawkish than we want? And if some people start leaning that way, you could see a pop in the banks. And last week, like you said, they did play a little catch up. So if you look real quickly here at the XLF, you'll see it took out this inside range. All right, so this took, the Russell didn't. This did, because it's been lagging a little bit. So every now and then you get a nice trade in the XLF. Here is the move from here to boom. Then what did it do? It held the 8-day again, and now it's on its way. So perhaps this could see the 200-day. And I'll give you a quick little overview of some of the names in there. JP Morgan, if you remember, had to help spark this move when it came out that Jamie Dimon bought a whole lot of stock down here. But since then, it hasn't really done much. Okay, so it is trying to hold higher over here. So if the banks are going to play some catch up, and you could get a little alpha here, you're going to have to see JP Morgan break above this 59.67, and then it's 200 days right there. And if you want to take a quick look at some other names, Goldman Sachs has been lagging, but maybe it too wants to take out this little pivot here. If that's the case, it's got some room up towards 160. And then, I actually looked at Morgan Stanley for the first time in a while, just because it has a nice lower chart pattern here where it's tight, and if it can get above this spot and the banks want to play a little catch up, Morgan Stanley would have to get above this little 2650. But just to keep the theme, this needs to hold for this to happen. So if this doesn't hold, it's game over. But at this point, it seems like a lot of these levels are trying to hold.
Bios continue to lag. Which levels do you think need to be taken out in order for them, to
wake up a little bit?
To wake up, yeah.
I think every time we try to go to the bios late in each rally, it falters. So we'll see this time if it's different. I know Mark's been looking at the LABU and the IBBs, are something that I think people trade as well. And if you look here, I just showed you all these sectors that are kind of close to the 200-day and have already moved out of these lower levels. So right now the bios, are the weakest sector. So we'll see if that changes or not, because sometimes things do change. And if this were to continue to hold, or if you're long, you better get out of the way if this were to break 252. But ultimately, I guess there could be a small trade here if it gets above this pivot, which is 262. And if that's the case, your next resistance comes a little closer to 271. But overall, still just in this channel, and it's lagging. It's not where the relative strength is. But in a quiet market, maybe some trades develop in this sector, but maybe even look at the more individual names. I know some guys are looking at, GILD because it's really tight here. So maybe if the bios wake up, this GILD will have to wake up, and it's nice and tight right now. So above this 90 could help clear the way. And then if you look at some stuff with more beta in it from bios, this XON, which has been, on a lot of guys' radar too. If this were to take out, just say this prior high here, it could help with names like even like last one, like a JUNO, which let's see what that looks like. Yeah, peaked out. So this one more, has to hold an area, and that area for it to hold would be the 21-day. So, the bios just don't look great. So, don't put on extra risks there just to try and, make some trades work.
Individual names in high beta tech have been on the move. Why don't you bring up the charts for Google, Amazon, and Netflix?
Well, those are the three that we focused on last week, so we'll see if there's more activity there to keep some of the momentum going. There's this whole big controversy now between growth versus value. So first we'll look at growth, and if you look at Google, it led the way last week. Google, at first it looked like it was weak and it was going to be testing support, and then I remember when the market was breaking down, it held, and now it's already above the weekly high here. Remember this false breakout here at 800? Well, it's kind of repaired a little bit. I don't know if today is the day you go after Google, after, my thesis, you have 1, 2, 3, 4 up days. I hate to be initiating new, longs into it, but if it were to hold, these moving averages right here and we pull back a little bit, I'd rather see you get, buyer a little bit closer to 730, but for that to happen, it's going to have to get below 736. So 736 is support 1, and that's support 2. Amazon, changes character from day to day, but it's kind of tight here. So if you look at this pattern overall, it seems as if you have a bit of a descending channel here. That if it were to break to the upside, maybe there's a catch-up trade. And plus, you have the 50-day right here. So, I might look at this today. If this can get above this 572-ish with major volume, maybe this is something today or tomorrow that could lead to a decent trade if this were to break this trend. And then lastly, Netflix. It's been kind of erratic and not much continuity, but you want to say what level does it need to hold to have any sign of potential momentum? Well, it's going to have to hold this 94.50-ish area, and then in order for momentum to come back, it needs high volume to get above this 99.74. Above that, maybe it goes, but again, you have to be very careful here because there's not much streaky momentum. It's just been a stair step, and it seems a little actually forced.
Some of value tech have also acted very well. Scott, what do you think about Apple, Microsoft, Intel?
Well, all the names from my era, right?
Yeah.
Not the names from your era
Right,
like you just spoke about.
Apple, maybe.
Yeah, Apple from both eras.
Yes.
So you look here at Apple, and I traded this all the time back in the day, and now it's been a little sluggish, but it does seem as if there could be another trade getting ready here. We actually caught this decent one above 98, went to 103.75, and then it's held. So to me, it's down a tiny bit this morning, 25 cents. This could be a focus of mine off the open or near the open. If it could hold, just say above this 101.50, maybe there's a little bit of catch up here or out of performance this week. Here's your 103.75, and then here's your 105. Their event is until next week, so if people are a little worried about being short into that, maybe it gets a push. So I'm going to watch Apple. I know Sperling likes to look at Microsoft. It does have a very tight pattern here, and it hasn't been great to buy strength in Microsoft, but it could help the overall market if it gets above 53. And Intel's been a silent one, just streaking higher at the 200-day already. I don't think you buy Intel here, but it's good to know that there is some strength in some of these semis. And you might want to take a quick look at NVIDIA. NVIDIA, near the highs, above all the moving averages. If this could take this out, this 33, perhaps it makes new highs, and we haven't seen a lot of stocks make new highs. And I'll give you another more high beta, chip guy, AVGO, AVGO. This also, above all the moving averages, coming into resistance. We'll see, can they let any stocks make new 52-week highs? So this one is just getting back here, but it's good to know that some names are doing this, and if that's the case, that shows actually that there is some health in the market, not just bounce backs. Chinese
tech acted strongly last week. Do you think there's opportunities in BABA and Baidu this week?
Well, you have the Shanghai this morning up like 1.7%, HK is up, and these stocks have been holding in there. in my morning note, I've put them back in the mix. Started almost 2-3 weeks ago, especially when Baba had that gap up and it held, and hasn't been a blockbuster move, but it's working its way up. So if you look here, the 200-day, like most names are coming into it. Actually, let's see if you draw this like this. So it still has some more room until the major downtrend. And we've been talking about how I think the 75, could be a magnet in Baba. So here is, the gap up that held. And then here, this level in the 70s just held. It's still above the 8-day. So if it's off a little bit today, maybe it starts breaking above 74 and you get that move. Then we talked about Baidu with the earnings gap. We love to look at things with the earnings gap. And this did hold that, okay, which was right here, okay, with that small red dog reversal on this day. And now Friday, it had some power. So with that being said, looks like if the market stays strong, this is one of the go-to names. So there's a list of the go-to names when the market's strong to go to. So if you know the pivots, it helps. And for Baidu, that pivot is a 183.86.
Gold has acted very well in 2016, starting to get a little erratic now. Do you think it's smart to be cautious here?
I think after a big move, it's always smart to take a little bit off, but it's hard to just fade and fight. But it's getting, like Chelsea said, a little erratic. It's a little, from day to day, it's wishy-washy. It's kind of saying, if this market, like there are some guys out there right now saying that we're in a new bull market. I'm not sold on that. But there are also guys that are saying, the market is not going to go higher, and they've been saying that since 1950 in the S&P or 1920. So there's some signals you look to see, what's the real trend. Some people look at gold, some people look at bonds, some people look across the board. So if we're going to really, I guess, take off to the upside, you will probably see, the metals break down further. And if you look at the GLD itself, it's getting a little bit erratic up here, and it's actually closed on the 8-day. So some people probably went out short this. You still never took out this little topping tail day up here. So some might even be short since then. And now this trend is getting a little faulty. It's up a little bit today, so we'll see if the market starts to get a little bid. Maybe some sellers come in here and the GLD gets below this pivot. So I would write this down. This is 119.36. But overall, you're still in a healthy trend above the 21-day. It just got away from it. This has been a big move. So if you did get long the GLDs into this tight range, or when it regrouped all the moving averages around 106 up near 120, not so bad. You even had an extra trade here. If you remember, this is one of the momentum ones I did above this 119 to 121. So just take a little care up there. And I'm also going to just quickly show you the bonds, TLT. And I know guys out there ranting all the time, just be long the TLTs. Well, here was your outside day, lower high, and now all of a sudden, it's resting on the 50-day. So you've had a lot of reasons to get out of the way of the TLTs. And with the Fed coming up, if they're really dovish, maybe it bounces. But if they take a hawkish stance at all, you could see a move down to the 200-day. So instead of just sitting in these things, it's probably better to trade them. So for right now, your support pivot to start the week is 127.21, and resistance comes in a little bit closer to 128, and we'll see. It might be quiet until Wednesday or so.
Any more final thoughts for us?
No, I just think that there's a lot of frustration. I was out all weekend. I had my son's soccer tournament. There's a lot of guys.
Yeah.
But you're there and you talk to people, and everyone's saying, what's going on with the market? Is this bounce back for real? Or what could I do? How do I make money? And there are guys that got stopped out of longs. Around when the market was at 1870 and felt good when it went to 1812, but now don't feel so good when we're back at 2000. Then there are people who said this can't last and started shorting at 1920. Now we're here at 2020, and they're like, oh my goodness, what do I do? And then there are some who are just sitting on the sideline who are going to start to have performance anxiety. So you have all these people, in a conundrum. And so what do is you just watch the levels and you try and have a process. So if you go one more time back to the SPX, what we say like here, you can look all the way back from this double bottom. This double bottom happened last year, and definitely went further than some would thought. You had your double bottom here, and then this is when it took back the 8 and 21 day. So really it took it back, this was 1950-ish. So from 1950, you had to move north of 2100 before it started to really get choppy and figure out what's next, which was a down move. Here, same kind of thing. You had to move up into resistance. Now it's back above the 8 and 21 day, just riding it. So you never want to be initiating new positions into big resistance areas, but there are a lot of people that probably shorted here, thinking this was resistance, and a lot of people shorted here, maybe added here and don't know what to do. So at this point, just do what makes you comfortable. I would say be very light on your feet. We might not be doing too much ahead of the Fed. You know, I talked about, can we hold above the 200-day for, you know, an episode, a session or so? You have 2009, which is that old support, which if we stay above that, very hard to get bearish. You know, and then you're above the 8-day, which is at 1995. If we stay above that, very hard to get bearish. In order to come back down and correct, first thing you got to do is break this, break that, and then get below this support. So until that kind of stuff happens, it's an opinion. And in order to get to new highs, you have to break this resistance area and get above Friday's high, which is, you know, 2022. So that's why you want to know the pivots and make adjustments around it and try and keep it simple, because everyone out there who's trying to outsmart the tape are almost outsmarting themselves.
Right. All right, that's it from us. Everyone have a great week and a great trading day.